Good afternoon, everybody, and welcome to this week's weekly wrap. Mirko, you and I on the screen. How are you, my friend?
I'm crawling my way to the end of the financial year. And someone said, that's on Monday, the 30th of June. I said, listen, if it's not done today, it's done. It's not going to get done. It
Gonna
can't
get
happen.
done. I do recall you taking a call yesterday. I think it was an opportunity that called through, and the guy wanted to do some tax planning. And I recall you being ever so polite, going, "Yeah, no, that's not going to happen, mate."
Yeah, I was actually super polite about that discussion, but it certainly wasn't going to happen.
No,
Uh,
no, fair enough too, mate. And you're right. Into the financial year, hard to believe that we're here already. But mate, we'll chalk that down. This one's done, and we move into a new year. But I guess with that being the case, has it been a quiet week on the markets this week, or has there been a bit of fun there, mate?
it's actually, I mean, as opposed to what's going on in the rest of the world, if you pay attention to the news or if you do not live under a rock, it's actually been a positive week in markets, which is quite interesting. I find, given the goings on in the world. And so, if I have a quick look around the world at the moment, so in Australia, we're up 0.8 for the week, so we're up a little bit. We started the week off, but it's been generally sort of positive from that front. And in the US, looking at that, US seems to be going strong, even though their country was, I suppose, technically, does it mean you're at war when you go and bomb Iran? I suppose you are. And yet the market has sort of ignored all of those signs, and the S&P 500's up 2.8% for the week, and the Nasdaq is up 3.6 for the week. So with one day to trade. Look, I was just jotting down some numbers before, and we were talking about this the other day, and sort of very hard to understand or believe that such movements in oil prices have not influenced markets at all. It's almost like the market has
Mm.
just said, "Yeah, we're going to shrug that off." And even if you look at it this week alone, we've gone from $75 a barrel for crude oil to 65. A year ago we were sitting at 83. I think it was the 27th of May, so a month ago. We're at $60. We went to 73, down to 65. Oil price movements like that generally trigger some sort of pretty extreme market movements as well, but we haven't actually seen that, which I find that hard to comprehend, and I'm a little bit surprised, to be honest.
Mind you, we have seen it at the petrol pump, my friend. So I think driving around today, it was somewhere around $2.20, I think, per litre. And I think it was only last week it was $1.60 a litre. So
Yeah,
it is kind of extreme in terms of petrol prices.
I drove past one of my favourite sites, which is the one down the road from our office here, and I think they're the first to go. I think there might be a little plaque on there at the station. So we're the first to go every time. And they were $2.20. I managed to get it at $1.75 or something, about 6 k's away. But yeah, look, I mean, we look at all that data, we know what's going on in the world, and yet the S&P 500 in the US is pretty much flirting with record highs. I think they were last night at some stage they were 0.1% from their record highs, which is quite extraordinary, in that respect. But you look at the growth that the S&P 500 earnings growth has actually continued. So we always look at the stocks and go, can we justify the valuation? Is there growth? Can we see where the growth is coming from? And there actually has been some earnings growth coming out of results out of the US, which has certainly been interesting in from that point of view. And I look at that, and I'm looking at some reports coming out of China, and it's almost like countries are working out ways around any of the stuff that's going on, and looking at alternatives. Like China's, we were so worried about, what are the tariffs going to do to China, for example,
Mm.
and China has basically, come out and said that their exports have simply exploded into Southeast Asia, into European Union countries. It's almost like they've pivoted and said, well, let's focus on the areas where we've got that low hanging fruit. And perhaps Australia needs to sort of take a leaf out of that in reverse as well when we talk about, well, what are our key export markets and where are the ones that we can grow so that we're not so reliant on the one. But so yeah, so that's been quite incredible. And even off the back of that, China's been getting belted because their industrial profits are down, and there's question marks about the stimulus. Is it actually working in China? Yet Citibank this week upgraded their forecast for Chinese growth to be at 5%. I think they had it at 4.7 before. So there's a whole heap of stuff going on, and I heard overnight that because early July the 90-day stay in tariffs was going to click over, and I heard the press secretary from the US, Carolyn Leavitt, I think her name is, come out and
Yep.
say, well, it's not, the deadline is not that critical. Does that sort of indicate that we may kick that can down the road a little bit more? Maybe that's what the markets are doing. Very hard to tell.
Two things, I guess, Mirko, that I probably noticed is that there is a new level of maturity in market. I guess now being 50 or just over 50, we were always accustomed to the fact that markets would react and impulsively, so either on the up or the down, and be really stupid. And in a 30-year career, you spent more time, getting whiplash watching markets do this. Whereas on this particular occasion, it probably seems like the first time ever that the markets are sitting there going, okay, let's not overreact, because if there was ever a time to react, now's the time. There is so much going on, be it politically, be it geopolitically, be it economically, from a policy perspective and so on. There's always cause to react. It just seems like the market has said, okay, let's just ignore the noise. Let's focus on the earnings. And if the earnings are right, that justifies the valuations in what we're trying to do. So that's been interesting. And that probably brings me to the next point of, I noticed this week, and I think it was a couple of weeks ago, you and I were marveling at Commonwealth Bank getting to $180. Commonwealth Bank this week hit 192. And it's run towards 200. I don't see it stopping anytime soon unless there is an event on market from that perspective. I'm struggling to understand the drive behind it. We can sit back and we can talk about superannuation contributions. We can talk about passive allocations. We can do all these sorts of things, and we can talk about the love of mums and dads and the dividend flow and so on. But is there anything in the numbers that you've seen which you kind of sit back and go, that's the reason for it to be at those levels, or is it just sheer weight of numbers at the moment?
Look, they've certainly been able to sort of peel out the profit levels, so they've been able to sort of come out and maintain their profits. I think the last one was north of $10 billion. So it's not like they're not making money, but there must be some price pressure on them too. We're in a market of, call it declining rates. Yeah. So that always a lot more difficult for banks to sort of generate revenue and the like. But yeah, you're right. I mean, sitting there today, I think it's at 180, 188, $189 or something. Having touched 192 is quite incredible. And there was actually an article in the Fin Review, maybe in last week, that some of the portfolio managers that were 12 months ago, 6 months ago, questioning the lofty valuations and being prepared to bet against the bank, they're looking a little bit silly now, yeah. Because when you look at the CBA, you sort of sit back and go, over the last 12 months, their share price has gone up 49%. But
Wow.
like in all investment circles, I think you need to have your belief set. You need to have the philosophy of how you invest money. And at the end of the day, if you don't believe that the valuations are justified, you shouldn't be invested. And I think that as an investor, you need to hold those disciplines as well. It's a bit like, from our point of view, we struggle to sort of see where the growth comes from in the Australian market when overseas seems to be a lot more earnings growth, occurring. And we
Yeah, of
reflect our
course.
portfolios that way. And I don't think anyone will hold that against us having that sort of view. So you can't sort of beat up these managers as well that have said, I'm struggling to see, why this thing's gone from $140 to 180 to 190.
Yeah, absolutely. Absolutely. And look, mate, at a geopolitical level, pivoting to that, fair to say it's probably been a quiet week. Well, the last couple of days have relative to what the weekend was like. So on Friday, when you and I last spoke, or when we spoke on the screen here, and we were having a chat, Donald Trump was sitting back saying he was going to take 2 weeks to consider his options in relation to Iran from that point of view. And yet we woke up on Saturday morning, and 12 hours later, he'd virtually thrown a couple of bombs, or those bomb buster things, or buster bombs, or whatever they call them, at Iran to nuclear capability, I guess, from that perspective. As to whether or not that's been successful or not, so that kind of set the tone for the weekend, and obviously the retaliation of Iran and so on. And then there's also been the subsequent meeting by NATO. When you start to look at all these things that are going on at this moment in time, I know for mine, it feels like that the world has just said, we're checking out. There's just too much going on that we just can't possibly fathom what's going on at this moment in time. So it seems like the world is moving along and our politicians are doing whatever they're doing. Is that the feel you're getting?
Oh, the feel I'm getting is it starts with a starting point. You couldn't make this stuff up, right? If you tried, like honestly, so you're having a whinge about waking up and realizing that, the US had decided to bomb Iran, but that's exactly what Congress was doing the same day. They were looking at their phones and going, and they would have been talking to old mate, across the desk going, "What do you mean we just bombed Iran? No one told me this was happening. This is Congress that had no idea because Donald Trump decided that's what we're doing." So just the whole thing is just incredible what we're actually seeing and the way it's going. People are going about things and the justifications, and I'm staggered. I'm completely staggered. And then the narrative that comes out, so at the end of the day, you're going to get asked some questions, and regardless of whether it's Donald Trump or the head of defense, or and the explanations and the narratives that come out, nobody. Well, I think the problem is nobody dare put their hand up and just go, actually, can you just explain that comment again? Because there's certainly none of that going on.
I think the thing for mine, Mirko, and I think we were talking about this yesterday in the office with a colleague from the States who came in for a visit, and we were just having a chat, and this whole notion about that MAGA, or the movement of MAGA, had been voted in because they were standing against the anti-establishment, the woke establishment, and all that kind of stuff, and the cancel culture, and they wanted to restore freedom of speech, the ability to be able to communicate, say what you think, and so on. The thing that's intrigued me the most is, and the Iran example has been very clear. Anyone who's dared question the success of the campaign and whether or not the bombs hit or got their intended outcome or their desired outcome, the way they have been treated and the way they've been labelled, and the response of that, it's cancelling in reverse. It's harming free speech in reverse. It's staggering. The elasticity of the Alaka band, I suppose, on both sides is kind of bizarre at this moment in time. And I think for most normal, sane people, you can't but help scratch your head in all this process, I think.
Yeah, you're right. And to be frank, this is not limited to the United States or anywhere else in the world, for that matter. No. It's actually at home as well. Like even at home, I watch with interest when our leaders get up and start banging on about something, but no one ever holds anyone to account. No one ever asks a difficult question.
Yeah.
And if they do, they get shut down, and surprise, surprise, that journalist becomes irrelevant. Yeah. So there's we call it in portfolio management land, we call it career risk. If you make this really big call, and there's a career risk there, and you've always got that in the back of your mind. Unfortunately, the people that are reporting the news and supposed to be asking the hard questions and trying to get these balanced approaches, they suffer from career risk too, and that's I genuinely believe that's a fact.
Yeah, I couldn't agree with you more, mate. Now, one thing I do want to probably just ask you about, just curious about this, with NATO meeting, and NATO is a North Atlantic Treaty from that point of view. If we think about NATO in terms of what its purpose is and so on, one of the things that Donald Trump has been really hammering home to NATO is that they need to lift their commitment, and they need to lift their spending. So the days of the US doing the hard and the heavy lifting and being the global umpire and being the defender of everybody is now over. And people need to be accountable for their own actions, I guess, from that point of view. The interesting thing is, it seems like the rest of Europe, or the whole of Europe, has now finally agreed, and everybody is going to at least 3.5% of GDP, which is a massive change where previously we were sitting at 1%. The pressure now is also being piled onto the likes of Australia as well to do exactly the same and follow the same route where, in fairness, we've probably taken the easy route. Always said we've got Big Brother over here who's going to protect us, where it's clear that Big Brother maybe won't protect us if we don't do our own level of lifting as well. So I guess two things. Do we think what Donald Trump is doing, what do we think that does to the world in general? And from an investment perspective, this transition to defence, does that open up an opportunity for investors as well?
Yeah, look, I mean, follow the money is always the case, and the numbers you speak of, sort of that on average, I think it's landed at 3.5% increase in defence spending over the next 10 years. There was also a sort of commitment of ballpark 1.5% on investments that are connected to security infrastructure, be it physical infrastructure or software and IT and the like. So you're talking about 5% spends of GDP. That is huge, particularly given that when you talk about global growth, most of these countries are growing at between 1% and 3% if you're lucky. So I think that from a strategic point of view, Donald Trump will claim a victory here because one of the things he did say quite openly when he set out was the US is sick and tired of being the ones that are spending all this money, and we expect other members of NATO to do that. But again, it's the statements that came out of NATO. There was talk about Russia and about security challenges around the world and the effect of Russia, but there wasn't sort of condemnation about them invading Ukraine, for example. So there wasn't any mention of that. So look, defence spending and all of a sudden it's become topical in Australia as well. And all of a sudden we've got our government saying, "Yep, we're on board with this, and we intend to increase our defence spend." Not sure where we're going to find the money, but we're going to increase maybe increase the credit card limit. That's how we'll do it.
Look, I think for mine, there's probably two things that I kind of think there. Like one thing that Donald Trump is doing, and I think Donald Trump's decision to bomb Iran, from one side of it, you could sit back and go, well, okay, it was opportunistic. It was an opportunity to tackle somebody when they were probably at their weakest point. So if you're going to do it, that's probably the best time to do it. So tick one. But I think it's probably more an illustration of if you're prepared to invest, we're prepared to back you. So if you look at someone like Israel, Israel has been doing the investment. Israel has got the defensive systems up. So what that was America showing we have no problem in supporting allies who are doing the heavy lifting as well. Where we have a problem is supporting allies who aren't doing any of the lifting. And I do think that is a change in narrative from Trump. So rather than Trump being the extreme isolationist, I think what Trump is actually doing is saying, no, we're happy to back you, but you've got to do the work as well. We're not going to be here to defend you. So that was just the view that I took. So that was probably a key learning. The other thing that I probably looked at this moment in time is, and I think your phrase there before, follow the money, is a true phrase in the sense that, 6 months ago, 12 months ago, we were talking about, renewable energies. We were talking about transitioning economies and all that kind of stuff. And normally when NATO meets, G7 meets and all that kind of stuff, this is all they're talking about. There was no discussion on that. That's all been put to bed. Defence is the new area. That's where the money is now heading. So I think from that point of view, it's going to be interesting how this all kind of plays out, because there's a finite amount of money. We can't go and print more money. Well, governments can, but we can't. But by definition here, you kind of go, well, okay, if there's this limited amount of money, that money previously which was going here is now going to go over here, from a government perspective and from a public spending perspective and so on. So it's going to be definitely challenging, I dare say, for the economy.
Oh, for sure. And the interesting scorecard will be, say, in 12 months' time, when countries are actually opening the books and saying, how much did you actually end up spending on this? On the subject of, follow the money and the like, does that mean that all of a sudden we're going to be looking at, armament and weaponry stocks and all that. Certainly not. But the smart investors, the intelligent guys that follow the money will actually find innovative ways to see where there are dual uses in money being spent. It might be in AI that all of a sudden then actually results in a secondary use, which is the betterment of society and better outcomes for people that require it and the like. So I don't know if you picked up as well, Luke, the discussion that President Macron peeled out after the NATO meeting, and he sort of said his quote was something to the effect of, "You can't sort of say to each other, as allies, we need to all collectively spend more, but then wage a trade war at the same time. It makes no sense." So it was a bit of a pot shot at what's happening out of the US. So if you want to talk about geopolitics and its effects on global economies, there's certainly a lot going on, and there's certainly a lot to digest. Yeah.
No, absolutely, mate. Absolutely. Now, on a domestic front, I guess there's probably two things that I'd like to just, before we finish off today, just to probably touch on. One is this $3 million super tax, which I think has been absolutely argued to the hilt and so on. And there seems to be this cohort out there saying that this $3 million super tax is designed to kill productivity and kill aspiration. And obviously the government, in contrast, has got a counter argument saying under no circumstances are we going to kill productivity, and under no circumstances are we going to kill aspiration. All we're looking is at generational fairness. Neither here, neither there, I guess, from that point of view. But I guess for the benefit of our clients and for the benefit of the people listening, is this $3 million going to kill aspiration? Is this going to destroy the world as we know it? Like, is this a case of Chicken Little, the sky is falling?
Yeah, look above the sky. The sky might be falling, but I think I certainly think it's overplayed. I think it's overplayed by both sides. So it's overplayed by the side that says how clever are we that we're going to introduce this. Because at the end of the day, what did we agree? How many people was this going to affect?
80,000.
80,000 people, right? Yeah. Last time I checked, we were, north of 20 million people in Australia, right? So, so
Yep.
it's been overplayed by those guys. And then the guys that are saying the size going to fall in as a result. I think there's a bit of overplay in that as well. I'll give you a bit of an inkling into discussion I had with a client on this last week. One of our high net worth investors, if you like, talking about this and how it's going to affect their position and the like. And at the end of the day, we couldn't get past the fact that even with the additional tax inside the superannuation fund, you are still paying a lot less tax than you would be in your personal name, right? So, and people that are on the threshold where there's a sort of a fine balance, there's actually some actions they can take over the next couple of years anyway to sort of try and avert that. But if you look at it, in the cold light of day, and you're realistic, and you know that unfortunately tax is what gives us quality of life in many instances with all the infrastructure and things that we need. And you can honestly say, well, I'm paying less tax even under this arrangement than I would be if it was simply invested in my personal name or personal names. Then you don't really have a leg to stand on, would be my argument on that front.
Yeah, look for mine, and okay, don't get me wrong, I don't like paying tax. None of us do, and I'm a bit in the Kerry Packer camp. Unless it's not like these buggers spend it wisely, and I'm happy to give it to them. So the less they get, the better off we are, I guess, from that perspective. But there is this notion of generational fairness, and it's not incumbent on those who can least afford to fund it for the people who can afford to pay it.
Yeah,
and that's the reality. You can't, and no matter how you look at the superannuation system today, even the way the system has been built, a husband and wife can have $4 million in a pension structure between the two of them, which is entirely tax-free. Entirely. And so you just kind of go, well, if it's going to then, and then the next million is taxed, the earnings are taxed at 15%. So, and then the million after that, that's where it starts to kick in. So you're kind of going, it's pretty generous. I think we just need to take a breath on this one, because it's starting to get a bit ludicrous, I dare say. Now, as a final point, Susan Ley this week went to the National Press Club. And to her credit, I actually thought she did really, really well. Got up there on the stage, presented, and said that the challenge for the Liberal Party is that it needs to reflect the society it seeks to govern. And I think for me, I just kind of listened to that statement. I thought, actually, she's got that on point. Because I think the problem with the Liberal Party, probably over the last 2 election campaigns, maybe the last 3 to 4, where they've started to lose a lot of seats, is that the fact that they've actually forgot who they wish to govern for. And if you think about suburban seats and the 50 seats that they have lost, that's where the damage has occurred. So they've really focused on a particular cohort of the electorate rather than being an all-inclusive electorate. So I thought she, for a start, and this is probably just more a comment, finding that she's actually had a really solid start, albeit in very difficult and trying circumstances, because when you start to think about the loss that they experienced, that was a pretty decent loss.
Oh, and in her case, when it comes to the party, it's definitely going to be all about rebuilding. And shock horror, someone actually had this thought bubble and said, we need to govern for the people that we're supposed to be governing for. It's almost as revolutionary as when they came out in our industry many years ago and said, we need to legislate that advisors need to act in the client's best interest. And I nearly choked on my cornflakes. I go, you actually need to legislate that. What sort of a problem do you actually have there? But it's good to see the language is changing and perhaps a bit of a pivot point for the opposition. But mind you, they are starting way behind the 8 ball, aren't they?
Yeah, no, they are. And she's got a lot of work there. I just hope that they persist with what they're doing. I do see value in doing a full review. I do see value in pulling the party apart, and I do see value in reconnecting with the electorate because look, democracy works best when there is a strong opposition. That's when it works best. And the reality there is, if you have a weak opposition, you end up being Victoria, and that's what ends up happening. So I think from our perspective, the more they do in that space, the better off we'll all be. Now, mate, it is 1:21 on a Friday. Time for us to log off, I dare say. Coming up to the weekend, what is planned? Are you doing anything exciting?
I filled my green wheelie bin the other day because I was doing a bit of pruning and whatnot. So a little bit left at my place, and someone saw me walking around with a little mini chainsaw, electric one before. And I had it serviced, and the consensus in the office was you should not be using any power tools, particularly that one. So yeah, no, I've got a bit of gardening to do this weekend.
Look, mate, well, get out there and make sure you enjoy. The great news from my end, mate, Essendon isn't playing this weekend. We've got a bye, so we can't lose. So that's got to be a good thing for us Bombers supporters. So I'm going to take that as a win. To Port Adelaide, thank you so much for making my weekend that little bit better last night.
That's
so I do
not
appreciate
nice.
That.
That is not nice.
Oh, look, the joy of Carlton losing is always fun, mate. The joy of Carlton losing. All right, to all our wonderful clients out there, bidding you all a wonderful, wonderful weekend. Enjoy. Thankfully, that cold, terrible weather that we had early on in the week has now disappeared. And I think it might be a semi-mild weekend, 13 and 14 on both days. So it won't be too bad.
We'll take that.
Absolutely. All right, guys, take care. Have a wonderful weekend. Chat soon. See you next week.
See ya.
Cheers.
Bye.